What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and welcome to the roadmap analysis video for January 17th, 2022. So this is the inaugural video of us doing this, and in this video we're basically going to cover the main indices, the S&P, the Nasdaq, and the Russell 2000, and go through our roadmap. And our roadmap is a very powerful analysis tool that gives you key levels before they are hit, and they are levels that you cannot easily find with, traditional technical analysis and things like that. So we do believe that we get a very clear edge in this market, and I'd like to share some of that edge with you today. So we've got a lot of lines on this chart, but it basically comes down to where have we seen responsive price action, and at what levels, if cleared, will signal the continuation of a trend or a change in trend. So let's just start with the primary range that we've been in. And we'll try and draw on this a little bit. There we go. This is basically the range. And we can make the case that since the beginning of November, the S&P 500 has been in a rotational, time-based correction for over a month. Now, put that in the context of we're within spitting distance of all-time highs right here. So it is very difficult to maintain any kind of aggressive bearish posture because the market is 3 to 4% from all-time highs, still above its major trend line, still above its major moving averages. And if we do manage to clear above 472.5 or 471.5, then we can easily see trend continuation right here. All right, so we've got a couple levels to work with, but the main one I'm focused on is going to be 471.5 to 472.5. And this is the low volume node right around here, and it's where we have seen price response during this correction, where we have found eager sellers into those levels basically every time. The only instance in which we saw a move above it was with low volume, and it was during the holiday trading sessions. All right, so we did see a rug pull after that. There is a tendency for markets when we have, down here, if we have a range develop and it goes into a trading range and then we break above it and then we get back into the trading range, there's a tendency to move to the other end of the trading range before we find buyers again. That's not guaranteed. That is just oftentimes how it happens. Let's hop over to the Russell 2000 really quick to show you an example, right? Where the Russell had been range bound for 9 months. It broke out, it failed, and it moved to the lower end of the range. So that mechanic is a very distinct possibility right here. As it stands right now, though, we have continued to find buyers stepping up. All right, so we saw a little bit of a shakeout right here, and then we could make the case for a slightly higher low into this. So I would really like to see how the market acts into one more push into this level. You can also see a ton of volume being built out right here. So this high volume node is something to pay attention to. And what this tells us is basically that there are a lot of market participants just above the current price of the market that may be thinking, hey, I'm going to get out at break even. And those market participants are the ones who keep providing responsive selling into this level. So it's a here or there sort of mechanic. If we can get above it and either hold sideways or retest, then you have a very high odds of trend continuation. Okay. If it holds again and we see more aggressive sellers once again, then odds are this inside range is not going to hold, and we're going to auction down to maybe 450 and change. Okay. Overall trend line is still intact. And this trend line goes back to the November 2020 lows. And this is where we have found response and response here, response here. Okay. So if that breaks, odds are you're going to see a little bit of a stop run. All right. So you're going to have a lot of eyeballs on this. A lot of technical traders will be watching this and say, okay, if this trend line breaks, we're going to see a move. All right. So that could end up being a reinforcing mechanism effectively. So we've got that trend line to work with. And we also have this local LVN right here. And I don't have it marked off of the chart, but it corresponds with this gap fill. And we also have this abandoned baby candlestick with a hammer candlestick. So that was a very bullish move that we saw basically right before Christmas started. Okay. So watch this LVN. That's going to be right around 454 and a third. That's going to be the gap fill. So if we sell off and we break this low, get a stop run, that would be the first place I would look for buyers to show up. Okay. Now we do have the very obvious support level, right? There's a test here and a test here. I don't think it will be a clean test again. Either, all right, so let's just say we sell off again. Either we truncate right here and then start, if we hold that level and then we reverse, then we'll probably come back and test that key level we've been focused on. Or if we come back into it, odds are it's not going to hold the third time. It's got way too many eyeballs on it. And I think a lot of smart traders know there are a lot of eyeballs on it, and so they're going to run stops. All right. So if we see a stop run, we'll probably come into this secondary trend that was started back from May and a test right here in October. And that's going to correspond with another just a small LVN where I wouldn't be surprised if we did see price response into that. If you were to throw a line right there, you can kind of see how there has been responses here in the past. All right. So there was resistance here, a little bit of resistance right here, and some support right here. So there is something to be said about that level. Do you go all in on that level? Probably not, but it's probably worth a trade. Below that, I've got a pretty decent level of 437 and a third. The reason I have that on there is if we look at the volume weighted average price from the pivot low, so the swing AVWAP, from March, and I'm going to try and show this to you a little bit better. That's going to start catching up to this price level, and it may act as a support level along with this key support as well. So if we were to see some kind of a hard liquidity break, okay, then that would be a very aggressive dip buy opportunity. Underneath that, we have a very clear level at 425 to about 427 third. From this LVN and this price response right here. We also have another swing AVWAP from right here that would probably come up and catch price if we were to see that. Now, to put all that in context, okay, so we've kind of laid out this roadmap saying, okay, we have a very clear level. If we have a high odds of a failed breakout, which could lead to a move to the other end of the range, we see either a truncation or just a knife underneath that to get a little bit of a stop run. Okay, we also have this key level and this key level. To put all of that in context, all right, let's just say we see a pull from this high down to here. All right, so that's going to be a 10% correction, right? And that is a lot for the S&P. That's a ton of volatility. So the odds of seeing that, let's just say in 3 days, are very low. The odds of seeing that in 2 months, yeah, it's possible, right? We could see something where we get maybe a pull here, we come back here, then we test and we go something like that. Okay. But that would probably take a couple months. Okay. Now this market has seen instances whereby it just goes straight down. We see a complete liquidity break and then we go from there. But the odds of that happening right now are pretty low unless we get some kind of change in some of the fundamentals around or at least the sentiment around the fundamentals where we have earnings season, or maybe we get some surprise Fed announcement or something like that. But overall, and even going all the way down here to this key level, if we just measure that from high to low, right, that would be a 15% correction, right? That is ugly in the context of this market. All right. So, I would be very okay buying a 15% correction into a massive level on the S&P. It's just, do we expect it tomorrow? No, we just have to have it on our roadmap just in case things get a little bit weird. Okay. So overall, primary trend is intact. We could see just some more sideways action. Maybe we get some stop runs. But the main thing here is that if we see a clearance and hold above that, then you have to take bullish setups until proven otherwise. All right. That is where the edge is. Okay. If we see that hold and then we roll over, or if we roll over from here, expect this gap fill, and then expect if that doesn't hold, just a little bit of a move to the downside. To catch that trend line and that local LVN. Okay. Next up, the Nasdaq. Let me get my notes. I did write some of this down. So the Nasdaq, here's something cool. While the S&P did make new marginal highs, the Nasdaq didn't. And this comes back to the Fed doing goofy stuff right here into that local top where Jay Powell basically said, hey, you know what? Transitory inflation doesn't exist. LOL, just kidding. we're going to start making some rate hikes. And if you go and you look at the Fed Fund futures market, you can kind of get an idea of how many rate hikes are getting priced in. Going into the June Fed meeting, it was about a 25% chance we'd see 2 rate hikes. Now it's a 50% chance. All right. So that does have an effect on large cap tech. All right. You can go read some macro stuff and economic stuff about why it just is. Okay. Now, this is where it gets a little bit spooky for me on large cap tech, because the response that we saw into 389, 392 was about as good of a bearish setup as you can get. So as an example, if the market has a very obvious level and then we sell off into it and there's just a spring off of that low, that's saying, hey, you know what? Bull market's probably intact because we continue to see good kinds of price responses from that. Same kind of thing here. If we break down and then we have a very obvious level and it's just a swift rejection off of that, then that is a bit of a change in character. Okay. Very similar to the S&P. We've been range bound since November. All right, it's been rotational, right? So semiconductors have seen some nice runs. You know, Tesla's been range bound. Apple's had a couple different nice runs as well. Remember, about 5 or 6 stocks control about 35% of the weighting in the S&P and about 50% of the weighting in the Nasdaq. All right, so you do have to watch Google, Apple, Microsoft, Facebook, Tesla, Amazon, those kinds of names to get a feel for how this is working. So it's range bound, and it's been trading very well technically, right? We've had this swing AVWAP right here that held into that key LVN. And then we had this other local LVN along with the swing AVWAP right here. So we got a little VWAP pinch. And overall, we can expect range until this breaks. Okay, so I am just watching 371 right here, and I'm watching 389, 392. A move and hold outside of this range will probably dictate what's going to happen in the near term. And again, it's a here or there sort of thing. There's one more thing with this volume shelf I just want to remember. So let's just keep that in mind. But overall, a range is the most likely candidate until we can see a move and hold above these levels. Okay. I am not betting on any kind of massive liquidity break on the Nasdaq 100, because if you look at how much volume has developed within this trading range, so right here, okay, when you have a lot of trade facilitation in a range, the odds of a move straight through it without any responsive market participation is very low. Okay, so even if we do see a breakdown, it's probably not going to gun it straight to the next level. It's going to be ugly. It's going to be a slog. We'll see failed breakdowns, failed breakouts, and everything in between. But it's probably not going to be straight down. Okay, now contrast that with how there's very little trade facilitation into this volume pocket right here. If we were to break underneath this, then yeah, we would see a swift move. But right here, it's a tough trade to make. So my thought is, if we were to see one more dip in the Nasdaq and large cap tech into this range, you can probably get away with starting to look at some reversion setups in the Nasdaq names, the Apples and things like that. Okay. So overall, it's just range bound. I'm pretty neutral on this right now until proven to the contrary. We just got to watch our levels right here and see what we can get. The spookiest one out of the three is the Nasdaq, right? Not the Nasdaq, the Russell 2000 right now. The Russell has been, we'll call this a cyclical bear market, right? It has been in a bear market since February of last year, right? The market has gone nowhere. Underneath the surface, certain things in the Russell are doing better than others. You just got to remember index composition. So if you look at something like KRE, which is regional banks, and that has a pretty high weighting in the Russell 2000, it's hitting all-time highs. If you look at biotech sucks right now. So that kind of mechanic has been going on underneath the surface in the Russell for months. Okay. You can also take a look at IWN, which is the value Russell, and look at where this is trading in its range. It's towards the upper 2/3 of its range. And then I want you to look at the Russell 2000 growth, which is IWO. And it looks a lot worse. It already has had a breakdown right here. So those two, I think, should be on your watch list to get an idea of whether growth versus value is doing better than the other. You can also see, we saw the breakout in growth, in small cap growth, and then J Powell came out and said, LOL, just kidding. And that's when we get the swift move to the other side. Okay. So index composition matters, but if we do see an actual breakdown of this level, I really don't know what we got after that. Okay, look at the two main areas of trade facilitation, basically from the 2020 crash, right, and this range that's been knocked out. We have this massive value area, okay, centered basically around 220, and then we've got it all the way back down at 150. Okay, in between here, there's not much. Okay, so for me, I really have no idea what will happen to the Russell. Are we going to get an actual liquidity break? Or are the components on their own going to help prop up the overall markets? If we see reversion in biotech, if we see continued upside momentum in the financial industry, then we could see it just drag the index kicking and screaming higher. So this is a brink level. This is a huge level for the Russell into about 212.5, that if we see an actual breakdown, there is not much liquidity. There are not prior buyers into this level. It's very thin, and this has the highest odds of liquidity breakdown. Okay, so that's the thing I'm most concerned about with just the perception of risk assets. If we were to look at, I'm just going to throw this on here really quick. Okay, so the swing AVWAP from that level pretty much held going into this. So I would watch that. That will also correspond with this high volume node right here. So, I just keep using this 222 as an over-under, saying, okay, if we can manage to get and hold above it, then that's going to be bullish. We haven't, so it's not bullish. All right. At best, it's range bound. At worst, we're right on the edge of a breakdown. But here's the if then, right? You can almost see this little bit smaller range that has been knocked out. If these levels start to hold, or if we get a failed breakdown, right, then we'll probably see a pushback up to 226. Okay. If we get to 226 and we hold 222 and then we break, then you can make the case for saying, okay, the bear market in smalls is over. All right. Because it has been a 9-month bear market or a full year bear market. Maybe we want to start looking for momentum, because no one is looking for momentum in risk assets right now, because that trade has been busted for months. So that's just something to really pay attention to. One more thing in volatility land, and this is where I'm a little bit, I guess we won't call it confused, we'll just call it a divergence. So if you look at how the VIX has been trading, and remember, there's no volume roadmap for the VIX, because the VIX is a statistic. I'm sure you could probably look at something like the volatility futures market, but I'm not sure the roadmap's going to give you as much of a signal right here, because volatility markets just trade a little bit different than other asset classes. So we look at spot VIX. Spot VIX is nowhere near the levels that we saw back in December. So the question I have is, how many people are still hedged up into this market? And that may be one of the reasons we continue to see lower highs get knocked out in the VIX, because anytime we get a pullback in the markets, the people who bought hedges back up here are closing out their hedges down here, and that creates a natural floor in the market. So I would consider this, for now, a bit of a bullish divergence. Okay, I don't think it's complacency right now. I just think that we still have a lot of hedging that is still on the books, and it's very difficult for the market to sell off when everyone and their mother bought hedges back in December. Once those hedges burn off, then you can make the case for a little bit more of a loose market to the downside. But man, we're just not there yet. Okay, so on the VIX, I've got some basic levels. We got 22. If we get an actual hold above 22, then I'll be concerned. But if we continue to just drift down here, and if the VIX futures curve, which I don't have on here, but it's around, if the VIX futures curve continues to be in contango, where it looks like this, and then spot is currently trading like this, then again, it's difficult to make the case for extreme bearish action when we're just not seeing any kind of panicky movement in the volatility markets. Okay. So that is all I've got for our roadmap analysis today. Thank you so much for watching. If you do want my stock picks, as we use our roadmap to identify the best setups available in the market, there is a free training that you can watch. Click below the link, or click below this video if you're on the blog, or go to the link in the description if you're on YouTube, and you can see how we use our roadmap, why we use it, how we use it to get the best options to trade for massive, massive wins. That's all I got for now. Thank you so much for watching, and I'll see you on the other side. Take care.